So you've received the letter, and now SARS wants to audit your VAT. We are MaxProf, your VAT and tax optimization specialists. So, Stefan, take me through preparing for a SARS audit before the letter.
So, my biggest feeling towards this is VAT compliance is generally a very reactive stance for most companies. They wait for year end, they wait for the SARS letter that inevitably comes before they even think about stress testing their VAT systems. Now, it's very, very important to periodically actually stress test your VAT architecture. So actually looking at whether or not the way you are going about reconciling your VAT control accounts, capturing your cash books, looking at your system coding. Obviously, it's not something you do month to month, but once in a few years, it's exactly the kind of testing you need.
But generally, from what we've seen, how often do companies actually do that?
Well, when we go into companies to do a 5-year review, we often find that the same system has been going for the past 5 years. So more often than not, longer than 5 years.
Yeah. Through our experience, we've seen that many companies have engaged some sort of an external auditor, whether it's big audit firms or whatever the case may be. What differentiates their method of extrapolation from ours?
Well, what you'll find is VAT is typically it takes a back seat in terms of all the audit sections.
Yeah.
Because it's a byproduct. It's a byproduct of creditors and debtors. The auditors will look at what reconciliation methodology was used in the prior year. If that got a good check, the year before that got a good check, this year, if it looks the same, surely it must be fine. Now, what we're doing isn't a external audit per se. We are actually reviewing the system. So we'll go in and we'll look at the general ledger line by line. We'll go look at inconsistencies in system coding, and we'll go look at your reconciliation architecture. We actually have our own methodologies that we apply. Therefore, we'll come to a different conclusion if there was a flaw in the architecture in the first place.
You mentioned line by line. How invasive is that?
It's not invasive at all. We have a data department that actually pulls an extract of your financial system.
Yeah.
And that's done. Then we don't engage with your IT or IT department at all. Then if we require any additional verification of documents, if we're looking at the expenses to verify if all the expenditure has been correctly treated for VAT, if we have to go look at your debtors or your sales to make sure that all your credit notes, your debit notes, any of those items, then we engage with your finance team. But we don't engage them unless we have good reason to.
And if we're talking about pre-audit VAT reviews, take me through that type of a process.
So a pre-audit VAT review always starts at the data point.
Yeah.
So we'll go and there'll be a kickoff meeting in which we'll ask you for all of your financial history for the last 5 years. We'll look for your VAT schedules for the last 5 years, VAT recons, and VAT 201s that were actually submitted to SARS with the statement of accounts. From there, we will then start working through all of your data. We will reconcile it back, and any inconsistencies we find, we'll flag internally. Then we have an internal meeting where different team member will scrutinize our methodology to make sure whatever we are finding actually makes sense. From there, we go and engage the finance team. and then sit down with the finance manager, or if it's an external accountant doing your VAT returns, we'll engage them to understand whether or not the anomaly that we've detected is valid or invalid.
Right.
If it is an invalid anomaly, we will write you an exposure report or a savings report, then based on these findings.
Great. If we talk quality assurance, we know that we are ISO 9001 2015 accredited service provider. How does that translate in terms of giving assurance to a client?
We have all these internal checks and balances from ISO that we actually have to comply with.
Yeah.
So we have strict document control requirements, strict internal control requirements, reporting requirements, team members. We have an audit committee meeting for our own reviews that need to meet strict standards as well. So it's everything we do internally actually has to conform to strict standards, which in turn should minimize any mistakes or irregularities.
That's great. And then cost of inaction. So let's assume company has gone 5 years without getting the letter from SARS. What do you think they should do to be prepared?
So,
or let's put it a different way. Should they even pursue an activity like this?
So the biggest misconception that the taxpayer typically has is that SARS has to stop looking after 5 years. Now, SARS under Section 99 of the Tax Administration Act actually is allowed to open prior periods if they have justifiable causes. Now, typically that won't be the case for most companies, because that is for actions such as fraud or material misrepresentation. Then SARS can open up those periods. But just because something has prescribed doesn't mean it's out of scope forever.
Agreed.
So you have to make sure you are regularly, I would probably say every 3 to 5 years, just have a external company come in to stress test your VAT. Because if you have been treating an item incorrectly for the past 5 years, it accumulates. If you've been making the same mistake for 5 years, that's leading to an exposure, meaning you are underpaying VAT to the receiver of revenue. Those will not only incur penalties, but they will also incur interest. And they incur interest all the way back to the first mistake. 5 years worth of interest can
compound to hundreds, and in some cases millions of thousands of rands.
Exactly.
But you mentioned the issue of under-declaring VAT, but I would assume that the same would apply to the under-claiming of your input tax credits.
Well, exactly, right? So
that's a cash flow that you have foregone.
Yes. So a big thing that we do for clients as well is we'll go and do a VAT recovery exercise,
right?
Which is running hand in hand with our VAT health check. So this recovery exercise doesn't only look at input, it also looks at your output VAT. So we will then find all these transactions within the last 5 years, because the 5-year prescription period of input and output VAT is strictly applied to the taxpayer. So we don't have the same luxury as SARS where we can reopen old periods if we find a mistake. But we can actually then go and reclaim this VAT. So the earlier you catch this under declaration to SARS in terms of your recoverable amounts or your over declaration of output VAT, the earlier we catch that, the less gets left on the table. Because every month you go on, you lose a little bit of potential recovery.
Again, that will compound over a period of 5 years, and ultimately, again, it could be hundreds of thousands, if not millions, in rands lost. Leading towards the end. So audit preparedness is not something that is reactive. It's something that we should be actively doing as an organization. to ensure that we're not only compliant, but we are also not losing any money to the fiscus as an organization, especially in this day and age in the economies that we are faced with. So, for more VAT tips, follow us and get in contact for a free VAT assessment or health check.
No recovery, no fee.